Thanks for that introduction. Can you see me over the lectern? I started my career in tin back in the early 80s when tin was still worth something, and was involved in drilling out the Collingwood tin project in North Queensland. A few years after that, the tin price absolutely tanked, and nobody looked at tin for 20 years, so I went into gold. So I started in tin and back in tin now. Hopefully we'll see this through to the end. So I suppose first off, you guys are probably wondering why a company like MetalsX would invest in us. Well, look, I can't speak for MetalsX, and Brett's already given you some take on that, but I can tell you about our key project, Taronga. So it's low risk, low cost, low capex, low tech, as well as being scalable. So in my mind, it's the simplest tin deposit in the world, apart from an alluvial deposit. It's an open pit. It has a strip ratio of around about 1:1. It has the simplest mineralogy you could ever find. And in tin, we believe mineralogy is king. We've already got a DFS, which I'll talk about shortly. We expect the environmental impact study to be lodged around about the end of this year. Moving on to the reason we think it's so simple, you can see that rock just breaks along the vein where the tin is and exposes the tin very quickly. So the normal disclaimer. So key messages to take away today, I think. The picture on the top left-hand corner is very old, and everybody's seen it before. But the reason I'll put it up there is we see this is now being borne out. So the three key messages: first, structural change related to demand growth and constrained supply, driving tin's importance globally. Second, meeting the growing needs for tin is not just from supply, but it's from supply from stable jurisdictions that will give manufacturers supply chain security. And third, our projects are, we believe, the most advanced undeveloped tin projects in the world. We meet supply chain security and compliance needs, being in Germany and Australia. We're low cost, low tech, low capex, low risk, and we provide a large and growing resource base. So previous two speakers have spoken a little bit about the tin story. So I'll run through these very quickly. So on the left-hand side, you can see the forecast from the International Tin Association, which suggests tin demand will approach about 500,000 tonnes by 2030. You can see that that's from a whole range of sources and applications. But while demand growth is strong, the pipeline for new tin projects is very slim, as touched on by previous speakers. So you can see that on the right-hand chart. Even if all these projects were delivered, it would only provide about 35% of the anticipated demand growth. So that, of course, leads to a supply-demand inequality, and obviously to fill that, there'll be an increase in the tin price going forward. So moving on to our main project, Taronga. So the world needs new tin supply. First tin, we have a resource base of nearly 310,000 tonnes, going back to gold, 310,000 tonnes of contained tin. And as far as we know, that's the fourth largest portfolio of undeveloped tin resources. So the projects are located in favourable jurisdictions, Australia and Germany, which is important for supply chain security, traceability and compliance. So Taronga is located in northern New South Wales, in between Glen Innes and Tenterfield, up along the New England Highway. We've got 138,000 tonnes of contained tin in JORC resources, including 52,000 tonnes in proven and probable reserves, and we are growing both of those. In Saxony, in Germany, we've got another 138,000 tonnes of contained tin at Tellerhäuser, and a further 33,000 tonnes at our Gottesberg project. The Tellerhäuser project is also polymetallic and has significant magnetite, zinc, silver and indium credits. So we see Taronga as being the world's next new tin mine, and for very good reasons. A definitive feasibility study confirms that it will be a highly attractive, low capex, low cost, low risk, high margin mine. The geology is given as a very large resource base in a mineralogically simple, coarse-grained ore body, amenable to low-cost, open-pit mining, with a very low strip ratio and easy grade control. Simple mineralogy means the tin occurs as coarse-grained cassiterite in narrow quartz veins, with a low rock strength, as you saw in that video before. So with the host rock is a very tough hornfels, contains no tin at all. So natural fracturing along the quartz veins enables very rapid liberation of this coarse cassiterite and subsequent rapid volume reduction and grade enhancement using very basic crushing and gravity technologies. So Taronga is also located in a historic tin mining district in northern New South Wales, which lowers our permitting risk. We've already received water rights allocations and clearances with respect to native title. And we've submitted our scoping report and we obtained SEARS on Monday this week. So for those of you who don't know, SEARS is Secretary's Environmental Requirements, Environmental Assessment Requirements. So coming on to our recent feasibility study. So the natural endowments make this a very highly attractive value creation situation. So starting on the left, the pre-tax NPV at a tin price of 30,000 US is 243 million Aussie, with a very good IRR. So, but yeah, that was the base case. We see considerable upside moving forward from that, from low-hanging fruit. So recovery improvements and conversion of inferred resources within the current pit design will bring up the optimised NPV to about 345 million Aussie. And further upside from infill and extension drilling will add to mine life and improve the economics even further. So finally, the project is very leveraged to high tin prices. At 40,000 US dollars, we add another 260 million to the NPV. So potentially looking at a plus $600 million NPV situation. Beyond that, we also have brownfield expansions and satellite deposits, and also potential to add a fine tin circuit down the track. So this slide shows that we've got a very competitive cost base due to the simple open pit mining, low strip ratio and simple processing. So the C1 cost is looking around about $12,000 US, and all-in sustaining costs around about 15,800. Total costs, including all the capital, takes us up to still less than 20,000 US dollars. So around the current spot price, cash margin from all-in sustaining costs is around about 52%. So there are a few competitor comparisons on the right side, and you can see that we're close to the lower quartile for all-in sustaining and cash costs. So at these costs, we're going to generate a lot of cash. So we've got very favourable geology and low strip ratios, I'll keep mentioning. But Taronga mineralisation is wide, so up to 200 metres wide. It's continuous, still open in just about all directions. Benefits from that low strip ratio, as you can see on the cross section there. Basically, half that, the pit there is ore. And that topography is not exaggerated. It's very, very steep country out there, which really helps with the strip ratio. And because we're an English company, I'll put the Tower of Big Ben there for scale. So, again, mineralogy, we believe, is king. We've got very coarse cassiterite. The average size of cassiterite's between 1 and 2 millimetres. It's hosted in very coarse quartz. It's hosted in quartz veins that have a much lower rock strength than the Hornfels host rock. You can see on the photo on the left, the quartz vein, the black crystals. You can see they're coarse cassiterite, and these veins have a much lower rock strength. I'll just reinforce that by showing this little video again, and you can see that it breaks right along those veins, exposes the softer cassiterite-containing material, which then upgrades very simply using simple gravity processing. So this is a very simplistic look at our flow sheet. So you can see it's simple, low cost, comprising crushing. What we do, we crush to 12 millimetres, then screen at 2.8 millimetres, and all the oversize gets thrown away at that stage, and we retain the minus 2.8 millimetre fraction, which contains between 85 and 95% of the tin. Then we're on to just simple jigs, cyclones, spirals, regrown ball mill, screens and tables. All basic kit, which is inexpensive on CapEx and on OpEx. So these basic concentration processes rapidly reduce the volume and increase the grade. So by the end of the tables, we've got a pre-concentrate of around 20,000 tonnes upgraded to 15 to 20% tin, compared with 5 million tonnes that we started with. The final sulphide float and dressing facility is very small, and that produces a concentrate of around about 5,000 tonnes per year at over 60% tin. So, but the steak knives, that's not all. We don't see Taronga as a one-off, but rather it's part of a regional tin district. So there are three main tin districts in northern New South Wales that we call the New England Tin Corridor. So Taronga lies within the historic Emerville field, and the map on the left-hand shows the extensive coverage we've got under exploration licence there. Sorry. Yep, sorry. So you can see the tin corridor in yellow there, and the three main tin districts. So we've got about 558 square kilometres of ground under exploration licence, which covers almost all of the tin occurrences around Emerville. So we've done soil and rock chip sampling and a bit of minor drilling on some of the regional targets, which show very similar characteristics to Taronga itself. So we see very, very good potential for a longer-term hub and spoke system developed around the Taronga processing plant. So the map on the right-hand side shows another one of these tin districts, Tinga, which we recently picked up about 277 square kilometres of ground, and very early stage exploration for us. Basically no drilling, deep drilling in this area, and we see there potential for another Taronga-style target there. So finally, a few brief comments on the value that resides in our Tellerhäuser and Gottesberg projects in Germany. In contrast to Taronga, Tellerhäuser will be an underground mine, but the higher grade, combined with zinc, indium and magnetite byproducts, helps offset those higher costs and complexity of underground mining. It's also part of a historic tin district for which we have exploration licences at the nearby Goddesberg, Brighton Broom and Arisberg projects. So in the bottom right, you can see the potential from some of our recent drilling results, with that the one at Goddesberg there, the top one being a standout. So to conclude, I'll just run through our investment case. So First Tin's listed in London and Frankfurt and has 100% ownership of two exceptional tin projects in Australia and Germany. It's located in historic mining areas, close to existing infrastructure, and they're all low-tech, low-risk, low capex and low OPEX. They have scale with established reserves and resources, and we're progressing through permitting at all those projects. Taronga, in my mind, is the most unique tin opportunity in the world, based on the simple, low-cost open-pit mining and the 1-to-1 strip ratio, the simple mineralogy, which allows a simple, low-cost, gravity-based flow sheet. We aren't looking at a fine tin circuit at all at this stage, but there's potential to add that down the track. And we've got excellent upgrading by simply crushing to 12 millimetres and screening at 2.8. The DFS shows we've got very attractive economics and significant upside potential and leverage to higher tin prices. We believe the outlook to the tin market is positive due to the structural shifts underway, the forecast deficits, and with tin recognised as critical and strategic metals in many countries. So the genesis of First Tin 10 years ago was to get ready for these shifts, and we now feel that we're very well positioned to take advantage. As shown on the simple graph on the right of the page, portfolio of existing projects, satellite deposits and the Tinga field means that we've got a good growth potential. Thanks for listening. This concludes the presentation, and just to reinforce it once again, simple mineralogy.
Any quick questions?
That's exactly right. Thank you. Have you done any sensitivity analysis on the 8% discount rate that you've actually put on those slides?
Sorry?
Have you done some sensitivity analysis on the 8% discount rate that you put on those slides for a brand new mine in New South Wales?
Yes, we have. I don't have the numbers offhand, but they were published as part of the DFS, which you can get off our website.
Still make money?
Yes.
Perfect.
Anyone else? One more. Right, happy day.
Is Germany more important to you or Australia?
Taronga's our lead project. It's our most important project.
What are you doing in Germany then, and why bother?
We started off in Germany, and Germany is still very attractive as a follow-on project. We're focusing.
Wouldn't you be better doing one project rather than two?
We're basically focusing on Taronga at the moment. Germany's going through basically permitting, so very little money's being spent on that.
Germany, I'd maybe drop that.
Yeah.
Just to be honest, I also thought that Germany was something they should have stopped when we were making our investment. When I went over to Germany and looked at the operations a couple of weeks ago, I've come back thinking that is well worth further investment. The infrastructure is there. They have a good team working on it. The grades are okay. It's difficult for a very small company. I agree to develop two projects, but having both of them is valuable.
Yeah. Thanks, Brett. You said that much better than I could. No worries.
Hey, just a shout out to Sky